2023. I am joined today on the call by my colleagues, Sanjeev Churiwala, CFO, Mr. J.V. Patil, Financial Controller, Mr. Kasturi and Mr. Rajesh Lachani from Investor Relations, and few other members from my finance team. 2 days back, the Honorable Finance Minister presented a very balanced budget which had a lot of initiatives and programs to push the infrastructure sector. The programs were typically in areas of clean energy, renewable energy, battery storage, pump storage opportunities, as also the long-term view as to how we will move towards a 2030 500 gigawatt of renewable capacity. It is heartening to see that the government is also focused on decarbonizing the economy, and I'm sure with all these announcements of the government in the budget, we will be able to move at a very fast pace towards using clean and greener energy in our quest to become net zero. As you may recall, Tata Power is the first power company in the country to announce its vision to become net zero by 2045. And we are working towards that goal. The big picture policy support that we saw in the budget was also about creating the transmission line from Leh Ladakh to bring clean power, solar power from there into the main parts of the country. Also, the support through viability gap funding for battery storage of nearly 4,000 megawatt hours will also help in coming up with clean energy and 24 hours clean energy solutions. Let me now start talking about the power demand, which we see in last 1 year has grown tremendously. Even in winter months, we are seeing that the peak demand has been in the range of 200 to 210 gigawatts. And we can expect that this will continue to grow as summer approaches. On overall basis, we find that in the month of January itself, there has been a 12% increase in power consumption. And we do expect that this trend will only increase going forward, considering the summer months as they approach us. Also, in the renewable sector, we have seen in the last few weeks that there has been huge price correction, especially in the prices of polysilicon, wafers, cells and modules, which will help us to implement many of the projects which were delayed in last 12 to 18 months because of huge increase in the prices of the solar manufacturing, as also in the prices of the various commodities like steel and copper. In the last quarter, we also saw that the Mundra plant could operate at full capacity, supplying to the 3 states of Gujarat, Maharashtra and Rajasthan. And the recent order of CERC has helped us that the tariff for Mundra becomes cost reflective. The Section 11 order during the period 5th May to 31st December has helped us to ensure that the supply of power takes place on a cost reflective basis and the full pass-through of coal cost is provided. And the benefit of this has been considered in our quarterly performance. Moving to the financials, Tata Power has reported an excellent quarter, witnessing strong performance from all the business clusters, including our traditional generation business, transmission business, and distribution business. Our PAT has grown consistently for the 13th successive quarters, demonstrating a very strong business fundamentals. Consolidated PAT achieved a new record of 1,052 crores, which is up by 91%. We also saw a very robust year-on-year growth of 30% in revenue, as also a huge increase in our EBITDA by 53% to a record 2,818 crores. Our renewable capacity during this quarter has increased to 6,072 megawatt with an installed capacity of 3,918 megawatt and another 2,154 megawatt under various stages of implementation. During Q3, the renewable company, that is TPREL, won a 255 hybrid project from Tata Power Delhi Distribution through a e-auction process. As also, it has won other orders from MSEDCL, which consists of a 150 megawatt order worth 684 crores. In addition to this, the company has won large number of EPC orders and has a large order book of nearly 3,914 megawatt, which includes the internal projects also. Our 4 gigawatt cell and module factory construction activity is at full swing, and we expect the module plant will be ready by September and the cell plant will be ready by end of December. And we do expect that the cell and the modules produced from here will be used for the various projects, both internal as well as third party, that will be implemented by us. The TPREL rooftop business also has seen very good traction in the quarter, and 127 megawatts of capacity was installed in the last quarter. In addition to this, 102 megawatts of new orders have been won during this quarter. The rooftop business, in fact, has a very healthy order book of 368 megawatts worth rupees 1,375 crores. The rooftop portfolio has now expanded to 1,300 megawatt cumulatively, with installation right across the whole country. And with this, we have a footprint in nearly 275 cities in the country. It was a good quarter for solar pumps also, with Tata Power executing nearly 12,000 pumps in Q3. In the December month only, we executed 6,300 pumps, which is one of the highest for Tata Power till now. We continue to power green mobility in the country and have partnered with Indian Army to set up EV charging points in Delhi cantonment area and are in discussions with many more similar cantonments in other parts of the country. On an overall basis, Tata Power energized 900 public chargers during Q3, taking our network of public and semi-public chargers to nearly 3,100. Tata Power's EV charging network is now present in more than 500 cities, with the company adding 18 cities during Q3. We also have installed more than 6,600 home chargers in Q3, taking the total number of home chargers to more than 30,000. And what we have seen is that there is huge amount of traction, and the range concern that people used to have is no more there while using electric vehicles, either within the cities or for their intercity travel. Our distribution business in Odisha is doing very good and continues to give excellent service, both in terms of reliability as also in customer services in all the 4 DISCOMs in Odisha. With all our 4 DISCOMs reporting a sharp reduction in AT&C losses, which is nearly 26% on an average compared to 36% 1 year back, we expect that Odisha DISCOMs business will continue to post profit in this quarter as well as in the subsequent quarters. We have installed, in fact, 5 lakh smart meters across Tata Power DISCOMs, across Odisha, Mumbai and Delhi, which is the highest by any power company in the country. Moving to the balance sheet, I am happy to share that our net debt has reduced further by 1,350 crores in December quarter. The fall was driven by company's robust operating performance, lower capex, and inflow of the outstanding proceeds from divestment of Arut Mill and other investments. Combination of healthy growth in the operational profit and declining debt has further improved the leverage ratio. Our net debt to underlying EBITDA has improved from 3.5 in the last quarter to close to 3.0 in this quarter. Our net debt to equity has improved from 1.32 in the prior quarter to 1.23 in this quarter. We are committed to maintain this healthy leverage going forward. With sustainable development at the heart of our operations, we are pleased to see several agencies acknowledging our efforts. In fact, Tata Power has emerged as the top-ranking power utility in the country by scoring 67 points in S&P rating with 85 percentile. The company has also improved its CDP climate change rating from C in 2021 to B in 2022. Tata Power has also won the Gold Shield Award and the ICA Award for Excellence in Financial Reporting for 2020. Tata Power continues to steadily move towards its long-term aspiration, built on businesses of the future while maintaining a healthy balance sheet. This is clearly visible from the improvements seen in the operational and financial metrics in each passing quarter. We look forward to your continued support. With this, I will ask Vikram to go to the question-answer session.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question-and-answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask question, please press star followed by 1 on your touchtone phone now. We have a first question from the line of Sumit Kishore from Axis Capital. Please go ahead.
Good evening, sir. My compliments on a strong quarterly performance. My first question is that revenue for the quarter, as per notes to accounts, includes an amount of 4.39 billion rupees relating to earlier quarters. Could you please explain the nature of this income and what has flown to PBT and to the PAT level? And does this take care of the entire amount that you had to recognize for Mundra UMPP?
Yeah. Thank you. I think it's a very important question. The answer could be a bit complex, so you'll have to kind of just bear with me. As you would already seen, we got this CERC order under Section 11, which talks about complete pass-through of the fuel price. Now, this is for the period starting from May to December. Since we are reporting the quarterly accounts, the amount pertaining to the previous quarter have to be disclosed separately, which we have done in the results that you would have seen. I think the better way to look at is, yes, for the quarter there's a pass-through, which has been agreed upon. But I think since it also has a previous quarter results, if you have to look at the complete 9 months result, yes, of course, there will be a backlog that we still need to resolve for, and that is why we are working on the revised PPA to ensure that our losses come down further.
Yeah. But that does not answer my question. What is the impact at the PBT and PAT level for the amount of 4.39 billion rupees, which is pertaining to earlier quarters?
Yeah. So I think this is this fully goes into PAT, subject to tax, of course. The reason is very clear. The cost was absolutely booked in the period when the powers were supplied, and we were looking at the differential tariff now, which you receive now.
Okay. So what is the update on Mundra UMPP now? What was so I assume that there was no under recovery versus fuel cost in Q3, or what was the set off which was given for the profits that you earn in the Indo coal mine? And was there any under recovery at all against capacity charges? And how is the present quarter playing out now that the Section 11 benefits have ceased? And so what is the outlook, or how far is the final outcome?
Yeah, so there are a couple of questions that you have bundled together. A is the capacity charges, which as per the CRC order under Section 11 have to be completely passed on to the producers. So yes, that we will be getting. There's energy charges, which is to ensure there is a complete pass-through of fuel. While I use the word complete pass-through of fuel, there will be small element of under recovery, because besides fuel, there are various other cost elements which is also there. So there would be some and of course there's one element of mining profit sharing as well, which is part of the CERC order, and that to that extent of the profit mining share, we will have the under recovery.
Okay. So how is it progressing now that in January and for the Q4 quarter, how do the benefits continue, or what are the discussions ongoing, and when is the outcome expected?
Yeah, the discussions are ongoing, and given that the Section 11 notification earlier with the MOP and now ratified by CERC, we would expect the revised PPA to be almost on similar lines, but the discussions are ongoing right now.
Okay. So the amount which has been additionally billed for prior quarters, has that been recovered from these states, or is there any dispute regarding those amounts?
No, so I think there are a couple of things again here. Is the amount that we have to receive on account of Section 11. The billing has happened now in the month of January, so it's not reflected as a recovery in December. Those recovery will happen now. And of course, for the previous period, that is, till the H1, there are amounts which needs to be recovered across various items, right? So that's why I'm saying it's very difficult for us to kind of respond on the phone. But what we can do is, for those who are interested, you can drop a message to Rajesh, and then Rajesh will provide you the details.
Sure. So just hopping on this point, so benefits under Section 11 have still not been recognized. So these amounts for prior period which are flowing into profit are then relating to what exactly?
No. The Section 11 revenues have been fully recognized. That's what I'm trying to tell you. The amount that was pertaining to the earlier period, 439, to your earlier question, is a complete pass-through in the PAT, because the cost that was incurred was already recognized in the previous period.
Got it. Just my last question on the TPSSL business. The order book at 154 billion rupees is indeed quite strong, but revenue for the quarter, if I look at the solar utility scale solar EPC business, excluding rooftop and pumps, is below 8 billion rupees absolute terms, and is down year on year. So I understand, that certain projects are not have got deferred, but what is the outlook here, and the extent of deferral seems to be pretty high.
Yeah. So let me try and decode this item by item. If I look at on a 12 months rolling basis, especially on the large scale utility, we almost installed about 1 gigawatt closely, and almost 500 for the next quarter, for the current quarter in the pipeline. So for the full year, you can expect about 1.5 gigawatt, which is a pretty decent thing. When it comes to the EPC, that's where we have gone slow very strategically and deferred some of the projects to the subsequent quarters, because we have seen the price of the modules and cells were very, very high. And off late, as you are already seeing, the prices are significantly coming down, and to that extent, you will get those benefits in the subsequent quarters. So that was more of a strategic intent. On the pumps, so we took a very strategic position of choosing the state that we want to supply and choosing the kind of SKUs that we want to supply. This was again on account of high prices of modules and high prices of cells. With things now recovering, we will accelerate further now.
Excellent. Thank you and wish you all the best.
Thank you.
Thank you. Ladies and gentlemen, in the interest of time and fairness to all participants, kindly restrict questions to 2 per participant. If you still have more questions, please join the queue afresh. We have next question from the line of Mohit Kumar from DAM Capital. Please go ahead.
Yeah, good evening, sir, and thanks for the opportunity. My first question is that can you confirm the operational capacity of renewables and under construction capacity and the timelines when do you expect this capacity to come up? In the sense, what the capacity expect to come in FY23 and FY24, and the expected EBITDA of this portfolio at P25 level of the entire capacity?
Yeah. So we already have an installed capacity of 3.9 gigawatt of the large scale. The total in pipeline is about 2.4 gigawatts. We expect about commissioning of 500 megawatts in the fourth quarter. So for the full year, you should see a close to about 1.5 gigawatt of addition in a large scale project. The timeline, as I said, 500 will already get commissioned in the current quarter out of 2.4. And the way the period goes, this will start commissioning next year over various quarters. They are in various stages of implementation, and hence, normally you can expect between 12 months to 18 months for the projects that have just been won, and the ones that are in the pipeline, most of them will get executed next year.
Okay. Secondly, sir, can you please let us know the coal volumes? I understand the coal volumes are slightly softer side in CY22. Can you expect this coal volume to pick up in CY23?
Sorry, coal volume in what sense to pick up? It is a
million ton, sir. Million ton in Indonesia mines.
Sales of coal in Indonesia.
Okay. Are you talking about the coal mining?
Yes, volumes. Yeah. Million ton. What was the volume for the 9 months, and do you expect this to pick up in this year, in the remaining part? Because what happened last year, I think it was very, very subdued.
Yeah. So I think there have been sporadic rains over there, which have definitely impacted a bit of a mining, but they are in the process of planning for the next year now. I would suggest you drop us a mail, and we kind of let you know as to what kind of plans they will have once we kind of know it. For example, KPC normally every year would have a mining plan of 50 million ton, and it's plus minus 10% depending upon the various things, including the demand supply gap, logistics issues. It could be rains and whatnot, right? But give and take, normally or every calendar year, they expect to kind of mine about 50 million tons.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you. We have a next question from the line of Puneet Gulati from HSBC. Please go ahead.
Yeah, thank you so much. My first question is again on, Mundra. Now that Section 11 is quite clear, done and dusted, can you provide some sense of, profitability at EBITDA level for Mundra and other important metrics for that period, the 9-month period?
I would request you can drop a mail to Rajesh, and as we have said in the previous call, Mundra is no more a separate company for us. It's part of the Tata Power. So we do not call out a separate item for that. But as I said to the previous question, I think we are still under recovery because of the mining profit sharing. And of course, this order for CRC is only for the period of May to December, right? And then as such, in the period of April and May, we still have a higher losses. So for us, on a YTD basis, we still have a significant under recovery. And we just hope that the new agreement that we are proposing or discussing should to take care, because unfortunately, we have burned a lot of cash in this business over the years.
Yeah, but I thought the order of CRC was quite clear, right? In some sense that 30% of the coal that you take for Mundra, only to that extent you will have to share the mining profit. In that context, you should actually be making decent EBITDA, isn't it?
No. If you only look at the quarter, because this order pertains to a period beyond the quarter, yes. But then, to the extent that we are sharing the profit, the mine's profit for the coal that we have been consuming, to that extent, it is an under.
It was 30%, right? I mean, it was only 30% of the coal that you're consuming, not for the full also, right?
Yes, 30% of the coal.
Yeah. So would it not have rendered the Section 11 period, strong EBITDA number?
Yeah, see, what happens is, it's important to, again, not just look at a quarter, because...
I'm talking about the full Section 11 period starting from May to December. Some sense, because that's the number one can expect, right? I mean, if the Section 11 were to continue into future as well.
That is correct. At the EBITDA level, yes. But, better way to look at it is how does it look like for the entire 9 months of duration, wherein we had various kind of arrangements. So, I think what is also important is going forward, we should not be making any under recoveries, and that's the main point of discussion right now for us.
All right, I'll take it separately. But on the Tata Power Solar, how should one think about the EBITDA margin? So you explained about the potential revenue growth. How should one think about the margin profile of this business?
Are you talking about solar rooftops or?
No, the solar EPC business. The entire
solar EPC. See, solar EPC, normally we have been targeting at a PAT margin of 5 to 7%. And again, that is on a portfolio level. Some of them will give lower and some of them will give higher. But on an aggregate level, that is what we want to target. If you look at our business for the first 9 months, it has been tad lower than that because, of course, we had very higher sales and module prices. And as a result, we have planned certain deferment of the projects to the subsequent quarter. But on a consistent basis, our aim is to kind of have at least a 5% PAT margin on the EPC business.
Yeah, but if I have my numbers right, I think Q2 had come down to almost stabilized number, right? It has a nice 9% PAT margin. And Q3 is back to 3% PAT. So I thought problem should have been solved by Q2, and now we are on a steady path.
Yeah, so if you look at the 3 quarters put together, YTD, right? YTD, I think it is 3% plus. Right?
Yeah, correct. YTD is fine because Q1 was bad, right? It was a negative, so loss-making quarter.
Correct.
Q2
so that's why
quite strong.
That is when we decided to take a certain calls, including deferring of some of the projects, including reaching out to the procurers to renegotiate the prices and everything else. And to that extent, we see some better thing coming in quarter 3, and hopefully with the dip in the module and cell prices that we see now, we should be able to improve on that. Therefore, we're kind of saying that we target a 5% EPC margin, PAT margin.
All right. Okay. That's all from my side. Thank you so much.
Thank you.
Thank you. We have next question from the line of Anupam Goswami with BOB Capital Markets. Please go ahead.
Hi, good evening, sir. So I'll take the Mundra operational numbers later on. But my question is on the this quarter, now that Section 11 has ceased to operate, do we see any break-even sort of position in Mundra in a new PPA, or do we actually see some profit coming also in the Mundra unit?
So are you talking about the fourth quarter, starting from 1st of Jan?
Yes, fourth quarter after the Section 11.
Yeah, so our intent is to see that if the PPA can be signed in the line of Section 11, at least the principles that have been set in Section 11. So to that extent of mining profit, yes, there might be certain under recovery, but even if that happens, I think we'll have a big relief given the big quantum of losses that we have been taking in the past.
So overall, to a bottom line, to say that there will be some under recoveries continuing in Mundra, and maybe the losses will narrow down, but entirely some profits will not reflect. If I just summarize in one line, will I be correct in this?
No, the idea is to recover the fuel cost The idea is to kind of see that we keep on getting our capacity charges. But yeah, to the extent of the mining profit that we have to share, will have some impact.
Okay. And so your capacity charge and fuel costs currently coming at what level? So if you can give me a ballpark sort of number.
We will not have it readily available, but in principle, we're looking at the fuel cost pass through. But if you drop a message to Rajesh, he might fetch those numbers and share it with you.
Sure. All right. Okay, so I'll get back in the queue. Thank you.
Thank you. We have next question from the line of Dhananjay Machi, an investor. Please go ahead.
Hello.
Please go ahead, sir.
Yes, I'm audible.
You are. Please go ahead.
Yeah, so congratulations for the numbers. So can you please update that why there is a drop?
I'm sorry to interrupt, Dhananjay. There is a little background noise. Please use the handset properly and come to a little quieter place and ask the question so that the management can hear clearly. Please go ahead.
Can you please update why there is a drop in the revenue and transmission and distribution system from the last quarter?
Sorry, your voice was not.
He's asking T&D, there's a reduction in the revenue.
Is that audible now?
Okay. So no, I think if you break up between transmission and distribution, transmission is more of a consistent business, so we don't have a profit. When it comes to a distribution business, we have kind of done some cleaning up with respect to the expected credit loss, which is kind of looking at the past receivables and trying to recover that, and if not, try and take some hit on the P&L.
Okay, sir. And any capacity utilization, current capacity utilization?
Of current capacity utilization of which business?
Average current capacity utilization.
So are you talking about the Mundra plant, or it's kind of looking at each segment separately? If you look at the investors' deck which has been uploaded, they have the complete breakup.
Thank you, sir. We have next question from the line of Bala Subramanian A with Arihant Capital. Please go ahead.
Hello. Good evening, sir. Congratulations for great set of numbers. My first question regarding capex in solar modules. I think the current capacity around 635 megawatt. So what kind of capacity addition is expected in next 2 to 3 years? What kind of capex amount, if you could throw some light on that?
Yeah. So I think in the previous strategy deck that is already uploaded in the website, we've kind of said that our intent is to kind of do 2 to 3 gigawatts every year. We are presently refreshing those strategy, but yes, our plan is to kind of invest big time into solar, and almost 80 to 90% of our capital that we are presently allocating is going to our green business. So I think that trend will continue.
Yeah, thank you.
Thank you. We have next question from the line of Rajesh Majumdar with B&K Securities. Please go ahead.
Yeah, good evening, sir, and thanks for taking my call. So my first question was regarding our module capacity. So I have a basic question. Now that the module prices have corrected to 21 cents or so, what is the feasibility of setting up a plant versus importing modules? So if the prices continue to correct more hypothetically to slightly lower, more lower levels, is there a long-term viability of this module plant, or rather we import at lower prices? That was the first question.
So let me try to respond to this. First of all, when you import modules, you need to pay the basic customs duty. So today the customs duty is 40%. So even if we are seeing the reduction in the prices of modules, it will always be much higher than what is the price at which we will be manufacturing. Because what we will be doing, we will be bringing the wafers, making the cell and the module. And on wafers, there is no customs duty. So there is an arbitrage, and I think the cell and modules that we will manufacture will be much more competitive, even with the very low prices of the imported modules that we get from China or any other country.
Is it a significant arbitrage, sir, or it's like with the falling prices, it's like would be 10-15% or so? Some ballpark number is what I'm looking at.
I just mentioned to you 40% differential on customs duty is.
On the duty, yeah.
So even if theoretically their prices are 20% lower than Indian prices, it would still be more than the Indian price when it is imported.
Okay, thank you. And so my second question was, we will see a considerable increase in the renewable additions now going forward, hopefully since the prices are falling and there is renewed focus in the sector. But what I've seen is that despite a year of sterling profits from the joint ventures and a strong cash flow, our debt is going up. So in the event of our renewable additions going up to say 2.5 gigawatts per annum, will there be a significant increase in the debt level from the current level?
Yeah,
assuming that the coal profits are not sustainable.
I think the way to look at it is when we look at a consolidated level, we do a capital allocation across our various businesses. Now, as we speak to you and also as you see in the deck, our net debt has actually gone down by 1,300 odd crores in the current quarter. So we have landed with a total debt position of about 38,000 odd crores, right? So yes, we kind of allocate a capital and the allocation is in the solar right now, in the renewable businesses, but we are mindful of a leverage on total debt as to how we manage it.
So you don't see it as an impediment for the long-term growth of the renewables business?
No, absolutely not. And I think, I think it's again not a correct idea to only look at an absolute debt when the business is really growing. I would rather encourage everyone to talk about the leverage, because finally what matters is leverage. Finally what matters is the cover, right? At least, and if you compare our business, given that we are in the infrastructure space, to any other player, we have far strong balance sheet.
Right. Thank you, sir. Thank you very much.
Thank you. We have next question from the line of Anupam Goswami from BOB Capital Markets. Please go ahead.
Hi, sir. Thanks for taking my question again. So my question on the overall vision of the company, where do we see in the growth-oriented factors, where do we see the capacity growing, and which segments? Is it only the renewable segment that we are trying to grow, or are we looking at some transmission lines and those networks? Because that was also a plan at one time, and we haven't seen any movement over there yet.
So, in last 2 years, if you see, we went and took over the 4 distribution companies. We added 9 million customers who are earlier existing 3 million. So, there has been a huge capacity addition in distribution. If we look at our transmission business, last year we went ahead and bid out 2 of the stressed assets. And both those projects are now under implementation. So we have been quite aggressive in terms of adding capacity in our distribution and transmission. As we have been earlier also sharing with you that there is a cutoff that we consider for any of these projects in terms of what sort of returns we are looking at them. And while we have been bidding for some of the projects at the prices or at the valuations that they are going, we don't feel it will meet our overall objectives. So we are very concerned if the margins are not there, and any bid that we do, we ensure that it meets our overall long-term return metrics. So apart from renewable, we are definitely doing a lot of work in distribution and also in the space of transmission. And as and when a good opportunity comes, we will be bidding for all those projects.
So, renewable, at what run rates are we adding capacity? Are we looking at?
So in this year, we have already won more than 2 gigawatt of renewable capacity, which consists of solar plus wind. and all these projects will get implemented in next 12 months to 18 months.
Right. So, and going forward, like FY24 and 25, should we look at a similar run rate of addition?
Yes, absolutely. And this excludes the group captive. So that also is going at a very fast pace. And you can expect at least 500 to 800 megawatt of group captive getting added every year.
So about FY26 or 27, we will reach about 8 to 9 gigawatts of capacity, if I'm not wrong.
No, it will be much more than that. Today, we already have, we are having installed capacity of 4. Under construction is 2, and there is another 1.5 where we have 1 where work has not started. So we are already at 7.5. So if we keep on adding 2 gigawatt plus the group captive, will be much higher than the number that you mentioned.
Okay. So my last question on the, now that Mundra revising PPA will come, do we down the line, do we see any growth or increase in dividend payout?
Well, this is a decision that the board and the shareholders take. So let us see how the overall performance is there and what they feel about it.
Okay. Okay. Thank you, sir.
Thank you. We have next question from the line of Bhavin Vitlani with SBI Mutual Fund. Please go ahead.
Thank you, gentlemen. Could you help us with the capital already incurred towards manufacturing of solar wafers and the solar cell module as well as a cell?
So we will be spending nearly 3,400 crores. So that's the capex plan for that business.
Okay. Any rough estimate of what percentage of this is already being incurred?
Well, right now it's the basic work that is going on, the civil work, and some advances have been given against the equipment. So very difficult at this stage to give you an exact number, but this is something which is under implementation, and based on the milestones, the payments are being released to the supplier.
Sure. Just to follow up on this, there are news reports about China government banning the export of solar value chain from wafers, and before that, in such a case, do we have a plan B of alternate sources versus China?
There is no ban on any supply of this. They are actually setting up huge capacities, and for them it's very necessary that they keep on supplying globally to meet the growth of renewable power. So the type of capacity additions that they are doing, it is very important for them to continue supplying to all large users of renewable power.
Thank you so much.
Thank you. We have next question from the line of Abhineet Anand from MK Global. Please go ahead.
Yeah, just trying to, understand the profitability for the quarter and 9 months. So, we have made a profit of 1,050, and it includes around 439 crores of the Mundra stuff that we are talking about. So is it fair to understand that if I subtract that number, that could be the adjusted PAT, or are there more adjustments to this?
So are you talking about the subsequent quarters?
No, I'm just talking about 3Q, sir. So we have reported 1,050 crore profit.
No, so what is happening is, because of the profit for the quarter, while at Tata Power level, we had a deferred tax asset. And given that we have a profit now, we have a reversal of the deferred tax asset. So while you're looking at that 439 crore, there's also a reversal of 431 crore in deferred tax asset. So by and large, that is nullifying the overall profit.
Okay. So largely the reported number is the adjusted profit. You were saying that, right?
in a way.
Yeah. Second is, if I have to arrive at the mining profit, correct me if I understand right, I have to add the investment company's losses and profit of the coal companies, right? Is there anything else that needs to be done?
I guess that is the right approach.
So if I've done that, I think probably for the quarter we made 720 crore odd profit versus 560 last year on a YY basis, which is...
Yeah, so what happens is, again, you have to look at the tax element, the withholding tax. There are various other things that has to be counted. What you can do is you can get in touch with Rajesh and he'll be able to share some more details. And I think there's something already as part of your investors deck which is uploaded. That would also give you some understanding.
Yeah, I have just that type of question, reading that out only because there are two coal parts. One is the investment company, companies, and the other is the coal mines.
Yes. Like 19.
Yeah. Okay. Thanks a lot, sir. Those are my questions.
Thank you.
Thank you. We have next question from the line of Atul Tiwari from Citi. Please go ahead.
Yes, sir. Thanks for the opportunity. So just one question on Mundra UMPP. So now that Section 11 as of now is no longer operative and the new supplemental PPA has yet not been signed, so could you share for the current quarter what is the PLF of the plant and on what basis are you billing both the fixed cost and the fuel cost, and what are the under recoveries, if any?
Well, we don't have an answer for a simple reason that you would expect the agreement to be signed soon, as Dr. Sinha already said in some of the previous questions. And if those is signed, you would definitely want to run the plant and at least give Gujarat 48%, and I'm sure the other states will also follow. So we'll try and look at it positively rather than be really worried about what's going to happen.
Also, what is the current PLF at least? Is the plant running at high PLF or the PLF are low?
Right now, only one unit is operating, and in that also 48% of the power is going to Gujarat. So it's a very small quantity that is being run. But as soon as we are able to come to an arrangement with Gujarat, we will be able to ramp up the generation and supply them the full 1800 megawatt quantity.
Okay. And sir, this week itself there was a news item that the government may be considering to invoke Section 11 again in the run-up to the summer. So have you heard anything on this, and is it likely that the Section 11 could be kind of extended again?
We've also read in the newspaper and the statements given by the minister. So let's wait and see.
Okay. Thank you, sir. Thank you.
Thank you. We have next question from the line of Girish Achipalya with Morgan Stanley. Please go ahead.
Sir, I had a few questions on renewables. As per slide 29, the wind PLF is actually down to 10%. I think it's the lowest ever. What's really happened there? Can you just clarify and if there is any one-off here?
So what typically happens is the winter months are the low PLF months. And this is typically every year also, if you see during these months, November, December, is very low wind speed. And it will pick up. Now it will pick up from...
YOY also, sir, is down 400 basis points.
Beg your pardon?
Compared to previous year, it's actually down to the same quarter.
Yeah, so the climate change that keeps on happening. This year, the monsoon rains went up to mid of October, in fact, up to end October, and that's why the wind speeds were very low. We expect that they will make up in the subsequent month. We had also seen that in both quarter 1 and quarter 2 this year, the wind speeds were very good, and on a cumulative basis, there is not huge difference between last year and this year.
Then in terms of debt that is likely to be repaid in the next 12 months on renewable, how much is it, and what is your rate of interest that you're getting your new borrowings in Renewables Act?
So I think it all depends on the capex plan that we have, and of course
so I'm referring to the capex plan that you have for the balance under construction capacity.
Yeah.
So how much are you getting your new debt at? And if you are to refinance any debt, how much is the refinancing likely? What is the repayment likely?
I think when you look at all the current borrowing that we have recently done, it all ranges.
If you could share the numbers, sir.
It all ranges between 7.5% to 8%. Depending.
No, I was referring to the debt amount also. So what is the debt amount you will have to repay or refinance?
Sorry, the refinance, that we'll have to calculate and give you, but all I can tell you is our average maturity period is very good, and to that extent we are not kind of really worried, but we do have those details available. And unlike many other players in the market, our complete borrowings is mostly domestic and domestic loans, and the short-term funding.
So your maturity is how long, sir? Is it 3 years, 4 years, 5 years now, like for the current portfolio?
I think it's a little above 5 years for the overall portfolio.
About 5 years.
Yeah, and the current one we have started looking at an even higher tenure. We recently did I think it's all the news is in the market. We did 1,000 crore borrowing at about 7.9% and about 8% for 10-year tenure. The 5-year rates are right now about 7.5 to 7.6. So that's why I was saying that our rate of borrowing will range between 7.5 to 8%.
Okay. And the module cost capex that you are incurring now, what will be the capex? What will be the module cost for that? How many cents would it work out to roughly?
So
manufacturing costs.
Are you talking about the manufacturing capacity?
Yeah, new capacity that you're building and which would come up.
Yeah, they still have some way to go, so it's too early to give any idea of what will be the manufacturing cost, because it all depends at what price we get these cells and then we get the wafers. So, but what we can tell you is that we will be very competitive based on the projections that we have seen and our manufacturing cost that we have planned. We will be very competitive in the Indian market.
And sir, can you just explain this deferred tax profit that you just said? I mean, I couldn't follow. Why is it coming and what is it about and why should it? Is it an extraordinary or not an extraordinary and why?
No, so I think I have to give you some context. At Tata Power level, which is the Tata Power standalone, we had carry forward losses coming because of this merger of the CGPL plant that we did last year. We had a huge amount of carry forward losses. To that extent, we have deferred tax assets created in the books. Now, as and when we are getting the profits, the deferred tax assets are unwinding, right? So if you see a higher unwinding, it's a good situation, which means that we are having higher profits. As simple as that. But then this is non-cash, and then it doesn't really impact our cash position.
So is it extraordinary or not an extraordinary? According to
this is ordinary because if you have profits, you will have a deferred tax asset reversal. Yeah.
So the gentleman is asking the question on profit, right? Recurring profit. So 1,000 crore minus the post-tax Mundra portion would be the recurring profit then, hence, right?
I'm not very clear on your question.
So the revenue that you've realized for Mundra for prior period,
yes,
post-tax would actually be the recurring profit, right? There would not be any other adjustment.
So the profit that we have realized and which is kind of going to PAT, that is because of the Section 11 Section 11 CRC order. Now, depending upon from 1st of January, if they are able to sign the revised PPA.
I think I'm referring to the quarterly profit for this quarter. I'm not going for quarter 4. So quarter 3 profit minus prior period post-tax will be the recurring profit for Q3. That's my understanding. So correct me if I'm wrong there and if I have to make any other adjustment.
Maybe
Girish, so on since we have carry forward losses on a standalone basis, we have actually no tax. But because we have created this deferred tax asset, as and when we realize profits, we will be consuming some of those deferred tax assets.
But sir said that this is not an extraordinary, and hence I'm just trying to reconcile that.
Yes, as and when we will get the profits, this will come. The deferred tax assets will be consumed. So this is ordinary profits. We will consume the deferred tax assets.
Yeah. So there, Girish, maybe we are not very clear on the question. Well, I'll again attempt. You can still put that question to Rajesh, and we'll try and decipher that and come back to you with a very clear answer.
Sure.
None of them are exceptional or extraordinary. As and when we get profits, right, in the standalone Tata Power books, and given that we have had the carry forward losses and deferred tax assets, these deferred tax assets will get reversed. And this is a non-cash item. It will not impact our cash flow.
Fair enough. Now, I wanted to understand CapEx last bit. So what has been the CapEx plan for 9 months that you have, and for full year, how much is pending? And for FY24, if you can just give us a broad breakup of different businesses, what could CapEx be?
Yeah, so for this whole year, we're kind of eyeing at 8,000 to 10,000 crore, and depending on how much we can accelerate in the current quarter, it will depend where we land up. And of course, given the size of the solar capacities that we're trying to put up, which is about 2 to 3 gigawatts, you could expect anything above of 10,000 crore to be the capex spending next year. Now, we are still working on the plans for the next year, but yes, you can at least expect that kind of capex to come in.
Thank you.
Thank you. We take the last question from the line of Anshuman Ashit from ICICI Securities. Please go ahead.
Thank you, sir, for the opportunity. So please correct me if I'm wrong. So during the initial remarks, Kavi sir had mentioned that there had been some asset sales that we had done during this quarter. So which were these assets, and what was the consideration amount?
No, this asset sale was not done in last quarter. We got the money in the last quarter. We had done the asset sale way back in 2016, the Arutmin coal mine. So some of the money which was to be received from them, we received in the last quarter.
Yeah. So I think if you see the cash flow, we have about 420 odd crore that has come in the quarter 3, and YTD I think we have recovered close to 700 odd crore, 750 odd crore, and that is I would say a good progress, because this was a sale that we have done a couple of years back, and we had engaged with the buyers to kind of get back our money.
So is there any further amount which is pending from Arutmin?
Small amount which is pending that we would expect to come in the next few months.
Sir, what is that amount? How much is it?
We don't have the exact computation there, but let's expect that we will anything between 200 to 300 odd crore would come in.
Okay. Oh, okay. And sir, second question on Tata Projects. So this has been another quarter where the subsidiary has posted a loss. So sir, how should we see this? Because the fluctuation quarter on quarter seems to be quite high, and can we see some stability, because now the commodity prices also have stabilized a bit. So can we see some stability going forward in Tata?
Yeah, I think you're bang on. While there have been the losses are not as volatile as was in the last year, and we have very clearly mentioned that we're doing a lot of cleanup. There have been some onerous contracts where they were making losses, which they are now trying to kind of wind up and put the losses ahead. But yeah, I think looking at the current order book of Tata Projects, it seems that the worst should be over now, and we think that the company will be in the recovery phase in the next year.
Okay. So we can expect some margin improvements going forward.
Yeah, we as shareholders would also love to see those improvements.
Sir, one question on the TPDD, Delhi distribution. So the power purchase cost, I know it's a pass-through, but it has increased significantly over the past 1 year. So should there be any concerns in terms of regulatory asset build-up or any other thing? How should we look at this? And is there any discussion on this front as well?
So they get something known as the power purchase adjustment. Right now, I think they are getting nearly 20% increase in terms of power purchase adjustment. So every quarter, they give the details to the regulatory commission. And based on that, the commission approves the PPAC. So I think at present they are virtually neutral in terms of the power purchase cost increase that has taken place.
Okay, sir. Thank you so much. Those answers my questions.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Dr. Praveer Sinha for closing comments. Over to you, sir.
Thank you, everyone, for joining for this call. And in case you have any further details, please connect with my colleagues, Rajesh and Kasturi, and I'm sure we'll be able to provide you all the required information and details. So take care, and once again, it was a pleasure interacting with you.
Thank you, guys. Bye.
Thank you very much.